Let's take a look at the tech sector. Joining us now is Dan Flax, Neuberger Berman, senior research analyst. This could, in large part, depend on what the macro picture looks like, and we get that at 8:30. But you're always bullish, probably, Dan. Which ones do you think should be bought on dips? There's some good value already.
Good morning, Joe. I do expect concerns about the cyclical headwinds to remain a factor, but I also do see select opportunities. We're in a period where there's tremendous change across the technology and really the broader economic landscape. So if you look at a company like Amazon, their cloud platform, Amazon Web Services, over $100 billion in revenue, it is well positioned to capitalize on the next generation of workloads, including generative AI. I think their retail business, while there are pockets of pressure in the consumer, they're continuing to redefine the experience with Prime, more one-day delivery, more video content, and I think the advertising business is underappreciated there. I continue to like Microsoft, where their Azure cloud platform remains well positioned to really help enterprises build out their digital infrastructure. And I'll round it out with Apple, where what we'll see next week is really the beginning of infusing Apple intelligence and evolving the iPhone experience. That'll play out over the next year and beyond, and I continue to like that name as well.
Do you have a view on whether we're going to have a hard or a soft landing at this point, Dan? That would make a difference for whether you stayed as long as you are in techs, right?
Joe, I think what we'll see is a mixed landing, in that there are pockets of the consumer in the low and mid end that I think will continue to see some pressure. Other parts of the mid and high end of the consumer are faring a little bit better. Europe and some areas globally are seeing softness. I think that persists. China, of course, remains relatively soft as well. But what we're seeing with enterprise customers, when we speak to them, they're looking to both adjust to the changes in the landscape cyclically, but more importantly, perhaps, they're trying to invest and really transform their organizations, because as we think about the second half of the decade, there's tremendous opportunity, both in terms of the technology, changing business models in some cases, and really transforming their operations. And that is what helps drive technology spend, even in the face of this challenging period. Think healthcare, drug discovery, fraud detection, financial services, digital twins in manufacturing. All that will be incredibly relevant as we think about the second half of this decade.
The NVIDIA, is it a plus or a minus for tech at this point?
Joe, I think NVIDIA remains a plus for tech. They're executing incredibly well on their product cycles. Sure, there's a little bit of a delay in the ramp of Blackwell, their new platform, but demand for Hopper remains very healthy. I think the bigger story there, in addition to the product cycles, is really this broad ecosystem. You have millions of developers writing and investing in the NVIDIA platform, because NVIDIA's tools and technology are helping make those men and women and their organizations more productive across a whole range of fields, be it manufacturing, healthcare, studying climate change. And so I think NVIDIA is a positive force. Sure, it will remain volatile, but I think the company is very well positioned over the next couple of years.